Welcome to another S&P 500 analysis. Today is November 2nd, 2022. The Fed announced its three consecutive 75 basis point interest rate hike today, and the S&P 500 reacted as expected, volatilely. As J Powell speak in his press conference, he made one thing perfectly clear, and I hope you heard it. If you didn't, continue to watch this video and I will reiterate what he told us. Stay tuned. Now, looking at this chart here, we see that the S&P 500 lost 2.5%, a little bit over 96 points today. But notice the VIX did not surge up. It's sitting somewhere just underneath 26. But the put-call ratio did went above the 1 level. So obviously, the market participant are buying more put than call, although they are still a bit fearful, but they are not panicking. In terms of the fear level, it is not above the 30 or up at the 40 level. A lot of people is waiting for that to happen. And here we did see the up-down volume ratio is 7-1 in favor of the down volume. And also there were 1,759 more declining stock than advancing stock for today. Now, there were 77 more new 52-week low than 52-week high. There were 145 stock make new 52-week low and 68 stock make new 52-week high in the New York Stock Exchange. And here on the New York Stock Exchange cumulative AD line, we did see a little bit of a positive divergence a couple of days ago. And right now it's basically just falling in line here. And we also noticed that there were a little bit of a negative divergence back here. So we'll continue to watch the advanced decline to see if the S&P 500 make a higher high. Will the advanced decline line also make a higher high? So these abnormality is basically due to the FANG stock reporting earnings, such as Apple, Meta, Amazon, Google, and those guys are distorting the S&P 500 when Apple is moving. Like one day it was up 7%, right? That was a hell of a short squeeze, and that put in a lot of distortion on the index, while the advanced decline, majority of stock was down, and vice versa when Apple was down and majority of the stock was up. So that kind of put a little bit of a wrinkle onto these distortion and causing these minor divergence. So we just have to write it out and be careful about overcommitting to positioning alongside of the short side until dust settle and these distortion is basically being cleared off. Now, before I go and talk about the SPY, the ETF for the S&P 500, let's take a look at the E-mini S&P 500, the future for S&P 500. As you can see, yesterday we have this long liquidation, basically the B pattern, right, on this market profile. A little bit small B, and that basically kind of indicate we have a little bit of a long liquidation sort of a price action. And you see that today we didn't cover these single print from yesterday until the Fed announcement on the interest rate hike. Then we came up initially and filled in these single print. Then when J Powell started his press conference, we saw the E-mini S&P 500 and the S&P 500 essentially coming down. And we see that it has established some single prints here near the bottom here. Okay, this is the TPO value area. Okay, and so right now we are basically looking for these single print possibly get filled tomorrow or the coming days. And we're going to take a look at these volume profile on the E-mini S&P 500 on the next chart. And here's the volume profile composite for the E-mini S&P 500. Basically, taking this pivot high here into to yesterday's session and essentially establish all these price zone here. So right now we are essentially looking for the price sitting in this zone here. And I will talk about these zone a little bit more when I zoom in and we go and take a look at the 30-minute or 15-minute time frame. But essentially, I just want to highlight to you these high volume zone here, and these are the zone that we'll pay attention to, and also this balance area down here. So we're going to take a look at that right now, and let's zoom in to the 30-minute chart here. We see that the price came up. Remember, this is 11 o'clock Pacific time, which is 2 o'clock Eastern time, and that's when the Fed made its announcement on the interest rate. You see that it was hovering in this near this area here, somewhere around 38.44. You know, this support zone here, basically this price zone at this lower edge, and it's basically just been chopping around and essentially just kind of waiting for the Fed to make this announcement. And you can see initially the reaction was positive, and then when J Powell started his conference, his press conference, you see price retreated, and then it broke this 38.44 and came down to this zone here at 38.08, and worked itself down to this 37.64 area. So right now we are looking at the possibility of, if it breaks this level, then we'd be looking at the price to come down below and dip into this zone here. So that would bring it down to this possibility of coming back down to this 3600, and also possibly put this October low to be in play. Might not be this week, but in the coming week. So this key point is the 37.64. If it's unable to hold this 37.65 area or so, then look for a lower level. Now, if it could break above this 38.08 and then get up to this 38.45 area or 38.44, then look for a move back up to this 3900 area. Okay, so that would be the things to watch for the coming days. Okay, so so just bear in mind, if it could get into this zone here, get into this 3900 area, this 3909, get into this zone, then the 4000 could be in play. All right, but that's a lot of if right now. So the key thing is watch the 3808 and then watch the 3444 and also get up to this 3909. Those are the levels to keep an eye on for the Emini SP500. Now let's take a look at this SPY here. This is the hourly chart, 60-minute chart here. Again, I also have a composite volume profile up to yesterday's session and identify the zone here. And you could see today it came up to this 387, 388 level, and then got rejected when J Powell started his press conference. So we're basically looking, if it could get above this 388, then get into the 390 and the 400 would be in play. But as you can see right now, it broke below the 382 and came down to the lower range of the weekly expected move and dipped to the lower edge of it at 375. Remember on the weekly video, we talk about the lower range of the expected move between 377.20 and 375. So right now, it could be coming down and testing this 373.80. So keep an eye on that. Remember, we talk about this back test of this pivot high, and essentially we got this zone here. So right now, it is back testing this zone, this breakout zone. And if it could not hold above this breakout zone and dip below this 373.80, then look for a move down to this 368 area and come into this high volume balance area. And here is the composite volume profile point of control, somewhere around 366. Okay, so keep an eye on that. If it could get above 390, then look for the upper range of the weekly expected move or a possible play. But right now, the trend is pretty much down because it broke this trend here, right? This intermediate trend on this right here today. So it broke down. So now it's a matter of could it get back above it and get above this 390 area. Okay, so I hope that you have found this useful. So in summary, J Powell reminded us who is in charge in his press conference. He said it is his responsibility for messaging us on the monetary policy direction. he will be the one to let us know if a slowing of the rate hike is coming or a pause is coming, not from anybody else, such as this guy Nick from Wall Street Journal or Bowler or some other people, talking head that is trying to predict, and interpret on the possible direction of future rate hike. So furthermore, he said the Fed is not close to slowing or pausing the rate hike. He reiterated once again his stance is he is willing to err on the overhiking to bring inflation under control than err on the side of pivoting too soon, and inflation expectation ended up entrenching in the consumer's mindset. So continue to look for 75 basis point hike in the near future, and it has not reached the terminal rate yet. More importantly, J Powell said he doesn't even know what that rate is at this time. He will know when he starts seeing inflation is starting to make a substantial retreat. So what does this mean for the market? It means be prepared for a lower low. Sure, we could still see the market might go up a little bit more, but do not expect a new bull trend, as the Fed policies still have a way to go and inflation is still too high for comfort. So be sure to smash the thumbs up to help promote this video. Thank you for watching and stay safe.